please explain, like I'm 10, how exactly XRP will help with the reverse carry trade unwind. Each step, both sides of the transactions need to agree to use it right. Who decides? When does BlackRock enter the picture? I mean, I've literally made 4 whole videos on it and tried to explain it as simple as it possibly can. I also just made a video on the liquidity index and, tried to keep that super simple and basic for, even like a 3rd or 4th grader to be able to understand it. The reverse carry trade, just as like the starting point. People have borrowed a bunch of money from the Bank of Japan at low interest rates. So what that means is the cost to borrow that money was basically free. They basically got free money. Now, that's only for a period of time. And then notes come due and you have to refinance stuff, you have to roll that debt. There's a set term or duration on those notes. As the interest rate goes up, if you borrowed that money and you can't pay back the whole thing, or you don't want to pay back the whole thing because you're using that money to make more money, it might make sense to unwind those other positions that you have in order to repay that note, because it becomes more costly if you don't than what you're making in the markets. That's effectively what's going to happen with the reverse carry trade. Is the return they're getting is going to be less than the cost of the note if they don't repay it. And that's because Bank of Japan's raising interest rates. They need to do that because there's inflation in their economy. That's how they strengthen their currency against other currencies, as they raise their interest rates. Their bond yield continues to rise. Again, this is hard to explain to like a 10-year-old because there's just a pretty significant portion of macroeconomics that's involved. But the premise behind it is free money was given out. That free money is due back. Otherwise, it's going to cost more than what you're making on it. They're going to have to repay that. And that's going to set off a cascade of events that will inevitably lead to a liquidity crisis where nobody can move money until they move to real-time settlement to be able to de-risk, the positions that they have, and also offset debts by the rise of that asset. So you have assets and liabilities. Right now, liabilities are sky high, assets are low. But if they start using XRP and they drive liquidity into it to cause the price to go up, similar to how they repriced gold in 1944, or 1933, excuse me, you would have a similar scenario where assets, offset liabilities again. As far as BlackRock goes, I think that they're going to enter the fray, along with a lot